Today's interview is with Anette Talie. Anette lives in Boca Raton, and she started out buying duplexes, bought 2 or 3 of those, then bought a sixplex, so she had a total unit count of 12. But then she went ahead and joined a syndication group and bought 190 units in Columbus, Ohio. So really interesting story and like why she likes real estate, how she's been able to do that, and kind of what's next for her. And she's also an architect as well. So that was a really, really interesting interview today. So stick around for all of that. As always, like and subscribe on Wrestling with Real Estate, the YouTube channel. Go to the WWRE Podcast and give me a 5-star rating and write me a review. It really does help us build this platform, so please take the time and do so. And I'm looking to speak to as many of you as possible. If you're interested in real estate, whatever capacity that is, I'd love to get to know you, see if there's any way whatsoever I can help you. So go to the link in the description down below, or go to wrestlingwithrealestate.com and sign up there. We can hop on a call and have a great conversation about real estate. But before that, stick around for today's awesome interview with Anette Talie. Hello and welcome to Wrestling with Real Estate, where we look to chokeslam all your real estate problems. I'm your host, former WWE wrestler and now Cirque du Soleil performer, and of course, multi-family real estate investor, Barri Griffiths. Now today we're joined by Anette Talie. Hey Annette, how you doing?
Amazing. Thank you for having me.
Well, of course, my pleasure for having you. I'm excited to jump into today's conversation, and we're going to do a podcast swap. We're going to do you on my show, and then I'm going to come on your show right after this. So it's going to be a fun day. It's going to be a good one. So before we dive into today's conversation, do you want to give people an idea about your background, what you've been up to, and what your current focus is?
Absolutely. So I am a Peruvian person. I come from Peru, and I've been living in the US for about 20 years now. And I am an architect by profession, but I started investing in real estate about 8 years ago. After the recession, our profession was hit really hard because there was no work for architects, the crisis. And so we decided that we had to look for something else to do and not rely solely on architecture, because my husband is an architect as well. So, we kept going through different ideas of businesses and other things to do, and we always came back to real estate. So we kind of shared that with a friend of us that owns some real estate, and he kind of mentored us a little bit on how to buy a rental property. And along the way, while we were saving money and looking for property, he told me that his cousin needed a property manager for a property. And I was pregnant at the time, 8 months. And I'm like, sure, I can do it. I cannot be that hard. So I jumped into property management. And that's where I really, really learned, a lot of what I know and what made me more comfortable in investing, because it taught me how to deal with tenants and, about real estate in general. So, once that happened, I was a little bit more comfortable. And that's when I bought my first property. And I started with duplexes and then grew my portfolio to 12 units here in South Florida. And then I realized that I wanted to go bigger because, it takes almost the same work to do something small than something bigger. So now I'm focusing on syndications of large multifamily. My team and we just closed 194 units in Ohio, in Columbus. So I'm super excited about that, and I can't wait for our next project, which is coming up really soon.
Very exciting. Yeah, a lot of good stuff there. So what brought you over to the US from Peru initially 20 years ago?
So the funny thing is that initially I came for vacation to visit a family member, and just things happen, and I met a friend that told me, why don't you stay to study? And I had 1 year left of architecture. So I was like, no, I don't think so. I'm going to go back to Peru and finish there. But like one thing led to another. I got the information and it just happened. And I decided to stay as a student in the US. And so I finished my career of architecture here. And then I met my husband, and, the rest is history. I stayed.
Now you live in the American dream, right?
The American dream. And I always had the dream of studying abroad. But I studied in a German school in Peru. So I was thinking that I was going to end up in Germany because, I knew a lot more German at the time than English. But, when I stayed, I had to kind of learn more English.
What is the connection? Is there a connection between Germany and Peru, or just how did that come about?
There is like there's a bunch of German schools in Peru. I don't know. I think after the war, a lot of people went to Peru, exited Germany,
Uh-huh.
and I think that's how the schools got, you know. And they are like some of the schools are funded by the German government as an outreach, to different countries. And in my case, it was just really the best school in the area that I lived, and my mom went there, so I went there. My sisters went there. It was kind of like the entire family went to that school, but it was really an amazing experience because when I was around 15, I went to Germany for an exchange program and I spent 3 months there.
Wow.
And it was just like it opened my eyes to the world because I went to the UK.
Yeah.
I went to London, I went to Germany, and then on my way back, stopped in Disney, in Florida to go to Disney, and then I went back to Peru. So when I went back, like my entire mind, has changed. Peru, it's lovely, but it's a third world country. So, I got to see what was out there too. And, that's when I said, like, I'm going to study abroad, but I was thinking it was going to be after I finish my architectural degree, not in between and transfer.
Isn't it? Yeah, traveling is an amazing thing. I'm a big advocate for traveling. It just like, because if you stay in one place, you just get used to that way of thinking and that way of doing things. And there's a number of different ways of doing things, even in one small place. But you travel, you see different cultures, different experiences, and it just opens your whole world to different ways of thinking. So I'm a huge advocate of traveling, I think.
Oh, absolutely. My husband and I, we love traveling. We actually took 6 months and we traveled around Australia, New Zealand, and Asia. I think we did like 20 countries in 6 months, but it was an amazing experience. We love traveling, and that's one of our goals and why we want to do real estate because we want to eventually be able to travel more and more.
Yeah, yeah. Me too. Me too. I love traveling. Going back to I'll get back to the real estate and the traveling thing after actually, but going back to the architecture, what made you want to be an architect? Do you think was there a burning desire, or did you think it was just a good career path, or was there something more? You think?
There was some vocational tests involved with my decision.
Okay.
But eventually, I think I stayed overnight at a friend's house for a sleepover, and her sister had this beautiful drawing on her desk of a building with color pencils, and it was just so I was so impressed with it. And my vocational test came out with architecture and management.
Mm.
And so when I saw that, I got really excited about it, and I decided to go that direction. And I don't regret it. I love architecture, design, and it has helped me so much in real estate as well. It's such a complementary thing between real estate and architecture because I get to design. I get like when I work on my marketing, it's all design related, and those are concepts that I learned in architecture school. And then if I'm doing a remodeling, the budgeting, the construction, it's just amazing to be an architect. I think I have a little bit of an advantage at being an architect, doing real estate because in my job as an architect, I work in five-star hotels,
Okay.
and we build them from ground up, or we do also remodeling. So I get to experience the construction from design to construction, and that's such a big experience, and I can apply all that into my investing.
Yeah, I was going to ask you about that because I've spoken to a few architects now, and the more I speak to architects, the more I realize how little I understood about what architects do. Right, it's not just sitting in an office making drawings, right, and then that's it. You send the drawings off, and that's done, right? You guys go to the sites all the time. You talk to the construction guys. You talk to different vendors, right? Because you kind of essentially bring everything together. That's essentially what the architects do, right?
Exactly. So that's something that people don't know. Like architects, like the engineer, they just do their part. The plumbing engineer does their part. The interior designer does his part. But then the architect takes everything together, coordinates it, makes sure that it makes sense. Make sure that the engineer, the structural, doesn't put a column on top of a plumbing line. Or an interior designer has an open wall where we need to have structure. So all those things we have to coordinate as architects. So it's really I love it. It's I really enjoy architecture.
Yeah, because yeah, like you said. So then when you talk about real estate and real estate investing, most aspects of real estate because you have to, right? Maybe not in depth, but in terms of understanding how everything works. So then when you go into real estate investing, you have that sort of essentially a construction background, right? Without being in construction, because you have to understand it, and that can really help you when looking at deals, I'm sure, and understanding maybe how you can do things differently, or what is the value add in this one, or just in terms of just understanding if you're going to do some construction work, okay, what's that going to look like, right?
Absolutely. Yeah, definitely. So on the deal that we're looking right now, I'm reviewing the survey that normally a person that is not in the design field or in architecture or engineering, they are not going to know how to read a survey.
Mm.
So I can look at stuff that, problems that, we can have, or, when we're looking at renovations, I can be, okay, we're going to do this, but, remember that if we move the plumbing, it's going to make it a lot more expensive than if we do it this way. I get to, when we're renovating, I can draw the plans. So it doesn't have to be all like, oh, move this wall here, and then it doesn't coordinate. Like I get to actually draw the plans and know exactly what we need to do.
Yeah, very cool. So what was your first? It was a duplex, you said, right? I think. What was your first deal, and how did that go?
So this was a deal that we were looking for a year.
Okay.
So once we decided to buy a real estate, we decided to go with a duplex because we didn't want to have one single income. We didn't want to have a house and then they leave and then you have like 2 months without rent. So we decided to go with a duplex. So from the beginning, we started looking for multiples. Um, because that way, like if one tenant leaves, then you still have the income. Half the income is there still. So that was our concept, and that's how we started. So it took us a year to find something that we were comfortable with, because remember, it was like our first purchase. Like we were looking for something like close to perfect, really, right? Like everything that we looked at, wasn't there. And we also started with a smaller budget, but as we kept looking and looking, our budget kept growing. So we started to looking at better properties in better areas. So we ended up buying this duplex. It came on the market a Friday afternoon. My husband saw it and he went drive by that evening. He came back and said, like, this is a really good one. So we called our realtor. We made an offer that night and we sent it early in the morning with a cover letter, pictures, everything.
Mhm.
So they said, oh, we are not taking offers until Monday. So we were like, no. It was listed very good price. I think like around 80,000. And so then on Monday they had like multiple offers. I think like 10 offers. So they asked the three highest offers to give them the best and final. So we knew that this property was worth it. The rents were $500, so it was way over the 1% rule that I use, where the cost of the property has to be 1%. The rent has to be 1% of the price of the property. So I was able to offer up to 100,000 easily with that rent, and I knew that the rents were under market also. So after knowing that we were competing with a lot of people, we knew we had to do a strong offer, because otherwise somebody was going to get it. And we knew that property was ready. We didn't need to do anything. It was pristine. The yard was perfect. The floors were perfect. Like we didn't have to do anything but get tenants because it was empty. So we ended up offering a little bit over 100,000. I think it was like $100,075, just in case somebody else did 1,000,
Yeah,
100,000. Sorry,
yeah.
100,000. So uh, we offer and we got it, and like we couldn't believe it because we had been looking for so long. That once we got it, we ended up renting it for over $500. I think our first renters were 550 and 600. So that property made us money from the beginning, and now each side rents for $1,000.
Wow. So you doubled the rent. What's the value? And what's the value? The value's probably doubled as well. No.
So I refinanced about a year ago, and I can't remember exactly how much. I want to say it was like 230 the price, but I was able to take, because I bought it cash. I was able to take all the money that I invested, and with that money, I bought a 6 units
Oh
deal.
wow. Yeah.
So it was a really good investment. And I bought it at the time when properties were starting to go up. So I was on the way up, which was a really, really good time to buy. And, that's why it went up so much.
What
Um,
year was that?
so it was about 9 years ago. So it was,
Okay. So 12, 11.
yeah, around 2000. No, 2000, yeah, 2012. Yes.
That's a good time to buy. And you're in Florida, right? For people who don't know, where in Florida are you?
I am in Boca Raton, which is about an hour and a half north from Miami.
Yeah, great area. Really nice. Not a bad area to live, that's for sure. But yeah, and Boca Raton is quite an expensive market, right? Especially now, I'm sure, right? But in
Yes.
2012, what was was the market bottoming out at that point there in Florida?
Um, well, it was a lot less. We bought our house at around that time. I think we bought it a year later. Actually, we bought our first investment property before we bought our house because we wanted to make sure that we were making money before we bought a liability.
Hmm.
So we bought the house around our house. We bought it for 289, and now it's worth between 550 and 650,000. So it has gone up a lot.
Yeah, that's very good. That's great. That's great. Congratulations. So the six unit, you bought the six unit. You said I think you refined about a year ago. You said right. So you recently bought the six unit.
Yes.
What was the story on the six unit? And is that the
So
same kind of area?
yeah, yes, so I don't buy in Boca Raton.
Okay.
I buy a little bit north in West Palm Beach area, and it's Boca is kind of like an A area, very nice, beautiful place, but the rentals don't work here because of the numbers don't work. Like everybody wants to live here. Schools are awesome, so I buy in an area that is more of a C area. That's my focus. So I focus on working people that, and I like the C class because it's people that you know are going to be renting for a long time. Like I believe that if you rent an apartment in a class A, in a year or two max, they're going to be wanting to buy a house, and then you're going to have more turnover of tenants. So I like to focus on C class where I have people that stay there for 5 6 years in the same unit, so I don't have any cost yearly, and I can increase the rent a little bit, to keep up with inflation.
Because A class, a lot of people that live in A classes, they're renters by choice, right? They choose to rent, whereas in the C class, they're renters by necessity, right? They can't afford to buy, and they're going to be probably renters for life. So you have I guess a different kind of tenant pool that's going to stay there longer, like you said. So what was the story on that six unit? How did
Yeah.
you find
So
it?
after buying that first duplex, we bought two more. And at that point, I was starting to get into real estate because before then, like I was doing it all by myself, just with the advice of these two mentors that I had. And they like to do the stuff by themselves. They are not the type of investors that network. So they know a lot, but they go solo. So at that time, I kind of started getting into networking and joined a mastermind. And I wanted to buy. My goal was to buy something bigger. I didn't want to do duplexes, so I was like, okay, so I can double my portfolio with a sixplex. I mean, that was a big goal to go from three duplexes to a sixplex in one transaction was big for me. So I said, like, how can I get this money? And I started thinking about, okay, I already got a line of credit on my house. I already bought one cash. Then I got the line of credit, and then I had, for the second one, I saved the money for the down payment. But I thought, if I save the money for this, it's going to take forever.
Yeah.
So how can I make this happen? And then I realized, wait, I have money in that first duplex that I bought. So that's when I decided to refinance it. And then we started looking for property. And a lot of people buy with wholesalers, or they do marketing, mailers to get properties. Every single property that I have bought here in Florida has been through the MLS. I
Okay.
just look for properties that have been on the market for too long, or sometimes they are missed advertised.
Hmm.
Like this sixplex was in the residential MLS instead of being in the commercial one. So regular people are not looking for a six unit; they are looking for houses in the residential MLS. So that's why I was able to get that one, because we saw it, and right away we went to see it, and we got our realtor to have a contract to them.
So was it was there information that was incorrect on it, or was it just simply on the MLS rather than
Yeah, so when you have 5 units and plus, it's considered a commercial property.
Mhm.
So the category was in the wrong place. They should have placed it on the commercial MLS, but they put it on the residential as if it was a house. So, when people got it, it's like, oh, why is it so expensive? It's a house. So it was way too expensive to be a house. But
Mm,
then because it was a house, and then four more units,
okay.
five
So
more
then,
units.
yeah. So then there wasn't much competition, if any, at all, for people.
Yes, there
Yeah.
wasn't.
Great. Yeah. So what was the opportunity? Was it just a turnkey property that was cash flowing, or was there some upside in?
No, it was a tire landlord. He was self-managing. He had the worst repair people that you can think of. I mean, the repairs that I kept finding were like so bad. So we came in, and I had tenants in place, so I had to be very strategic. One of the things, there was one tenant leaving, so I asked them to not place them, no place new tenants, so that I could remodel that unit. But everybody else had leases, so I had to work with the tenants. You cannot remove people unless their lease expires. So when we bought it, we right away remodeled that first unit, and it looked really nice when we finished. So I was able to get, the rents I think were like 825 at the time when I bought it, and I was able to rent the new one for 950. So it
Mm.
was a big bump in rent. Um, and then as soon as the leases were expiring, I was able to increase because the other one I already had a comparable that rented right away for more. So I was able to keep the tenants that I had, raise it, and if I had one person leave at the end of their lease. Thank goodness, because she was, and she was like,
Bad
she would
tenants.
call me crying because the dog couldn't go out because somebody looked at her. I mean, it was just like she was like trouble. So as soon as she told me she wanted to leave, I'm like, yeah, no problem, no fees. You can leave whenever you want. You
I'll
can
even
get
pack your bags for you. Yeah.
yeah. So then I we took that unit was already remodeled, not to my standards, but I just wanted to get the property to cash flow. So I just placed a new tenant. Did you hear that?
Yeah.
My kids just got back from school.
The kids.
Um, so um, so yeah, the so once I filled out that unit, then the rest I just got the rent up, and then I started fixing up the property so that it would look nicer. And then I've been doing repairs as they happen, because when you have tenants, you don't one of the things that I want is I want my properties to always cash flow. So I don't want to empty it and then have no income,
Mhm.
repair everything, and then no. I like to once a lease is over, then I remodel and get somebody else. So right now I still have two. I have two.
That's okay.
Almost, do you cut your videos?
Yeah.
You do? Okay, please cut it. Oh, he's gonna keep. Let me open the door because he's gonna keep beeping.
Okay, go for it. Yeah.
Sorry about that. My husband was like, I know.
I'm just writing it down now. So we're 43. We're about 40 minutes in. So my editor knows when to cut it. Okay, cool. So yeah, sorry. So the 6 unit, the tenant you were talking about, the tenant that you finally got out, and you did
Yeah,
extract all the equity from it.
yeah. So where do I pick up? Um, okay, so I was gonna say this. All right, so I still have some tenants that were in the building when I bought it. Actually, one of the leases ends this January, the end of this month. So I'm gonna be remodeling the bathroom, which was the only thing missing on that unit. Everything else is already remodeled, so I'm gonna be able to bump the rents up on that unit and keep going with the remodeling.
Nice. So have you increased the value quite a bit? You think what's the plan with
Yes.
that one, to hold or cash out, refinance, sell? What is your plans with that one?
So my goal, like I kind of do the BRRRR strategy where I buy, remodel, then refinance, and then repeat. I think I missed one of the
I always get
refinance, repeat.
I always
So
get
I
that
kind of
one
do
wrong.
that. So right now I have another unit that I want to remodel before I cash out refi. But I actually increased the rent $75, and I thought they would leave, and they said okay. So I guess I have one more year before I can do that one.
So when you go into these properties, your goal is to do the BRRRR with them. So when you're analyzing them, you're planning on that. And so with something like that, how long do you look to hold them before doing the refinance? Do you have a whole period or just as long as it takes?
No, I think I kind of research when the value is at least enough for me to take all my investment out. So, for example, on my second one, I bought it for 200. I put 50,000 to buy it because they require here a 25% or at my bank. So I waited until I could get 50,000 out minus the closing costs, so that now that property basically is it's the return is infinite because I have no money into it,
Yeah,
right? Like the money that I put to buy it, it's already out of the property. So I with that one, with that money, I bought an investment property in Ohio.
nice. So what Annette is saying is that she buys properties that are undervalued that need some work. She improves them in whatever way that is, and improves the value. Then she's able to do a cash out refinance and pull all that initial equity out of the deal, tax free as well, right? I believe it. I'm not a tax professional, but I believe it's
Yes.
tax free.
Yeah. So when you refinance, you don't have to pay taxes like if you sell. When you sell, you have to pay capital gains. And at least in Florida, I wanna buy and hold because I think the prices are gonna keep going up. Is we are in such a desirable state that it's always gonna keep going up. Even if it dips down for a little bit, it's gonna go up. Um, so here in Florida, we like to buy and hold. Um, and yeah, keep growing. I am right now like itching to buy another small property because it's so fun. I mean, I love the remodeling and the hands-on stuff.
Yeah, but so then like you said, you grew your portfolio to 12 units, but then what made you then, rather than continue to grow your portfolio, what then made you think, okay, I want to go bigger and go into a syndication? Because that's a completely different model, right? You own
Absolutely.
a smaller piece of a much bigger pie, right? Rather than owning all the pie.
Yes. So, I realized quickly when I bought the sixth unit that it was a lot of hassle to buy a commercial property, and it was only six units. It was one less, two less, and it was residential, and it's so much easier. You can finance it a lot easier, a lot of less requirements. So, and also I had been already managing a 16 unit for a while. So I realized it's so much easier to have all the units in one location rather than five different locations when you are self-managing, which is what I do here in South Florida. I manage my properties myself. So I decided I want to go bigger. So when I started looking at bigger units, like once I got the six, I'm like, I should have gone bigger. So then I started looking at bigger, and then how can you afford a bigger property? The only way is with a team. So that's when I kind of started looking at syndications.
Okay. And then, so what was the process that you start looking at syndications, but how did that process go from starting to looking to taking down 190 units in Columbus, Ohio?
Absolutely. So, the first thing is like I educated myself because I had no idea what syndications were. And, for your audience, if they don't know, syndication is basically when you get together two group of people, the general partners and the limited partners, and they come together to buy a property that is bigger than they could do by themselves. So the general partners have the experience and have the time to do it, and the limited partners have the money, but they don't have the experience. So you put the two together and you are able to buy large properties, and the limited partners get a nice passive return. And the general partners, they manage the property, they do all the work for you, and they also get a piece of the pie.
Yeah, that's a great explanation. Yeah. So, and it's a win-win for everyone, right? You get the guys that want to be active that are active, and the people that want to be passive, they can be passive and just collect that.
Yes, because you have a lot of people, for example, doctors, lawyers, engineers, architects, that they have some money they want to invest. They don't want to put it in the stock market because sometimes it fluctuates too much, it's too risky. Uh, they want the benefits of real estate, but they don't have the time to do it themselves. So in this way, they can invest small amounts because you can start investing in a syndication from $25,000 and up, depending on the opportunity. So they can put these small amounts of money to work, um, and then, relax and wait for their check, every quarter or monthly, depending on, what the syndication is, rather than, look for the property, spend time learning, spend time, talking to the property managers or managing themselves, and then get calls in the middle of the night because the toilet doesn't flush. I mean, and I tell you, I manage myself, and all the problems happen on a Friday night or a weekend. They don't happen during the week. It's always Friday night when you cannot call anybody because they're going to charge you extra for a weekend call. That's when everything happens. So, all those headaches and dealing with tenants, that's, you have to really learn. It's kind of an art to deal with tenants. I've been dealing with tenants for 9 years now, and I've learned so much, from just being quiet and letting them talk when they're upset until they just let it all out, and then they let you talk, because otherwise you're going to start fighting, right? So,
Mhm.
all those little tricks, you don't have to worry about learning that. If you just want to invest and you just want the benefit of real estate, then you can invest in a syndication, and you are gonna mitigate your risk because you're partnering with somebody that knows what they are doing, that has experience, instead of doing it yourself and putting all the risk on you and your decisions.
Yeah, yeah. That one is a big one to me. Is like, you start in real estate, right? Unless you have any other experience, you're starting at zero, right? But if you join a syndication, right, you're using those people's experiences, right? Those people have done deals, they've built credibility, they've built a network, right? They've built teams, right? They've been through it, they've done it, they've made mistakes, right? And you can just leverage all of that and start where they're starting. So rather than starting at zero, you're starting at where they're starting, right? You're at the same position in there because you're using everything that they've created. And I think that's huge because everyone can do real estate, right? I say this all the time. You can do real estate. Whatever you want to do in real estate, you can do it, right? But at the same time, it can be challenging, and there's stuff that can definitely go wrong, right? There's a lot of mistakes I made, you made, I'm sure, and other people have made, right? So, why not mitigate those risks and take those risks almost off the table and just use people that know what they're doing, and then still be in real estate, still own this great asset, still get a great return, still have the tax benefits, still have the appreciation, the debt pay down, right? Have all those things, but really mitigate your risk and also give you that time freedom, right? That's the big thing. Like you said, you're mentioning doctors, lawyers, attorneys, dentists, all those people, right? They're busy and they're good at what they do, right? Focus on what you're good at, right? And I'm a big
Yeah,
believer in that.
absolutely.
You've spent to be a doctor, I don't know how many years, right? Training to be a doctor and then being a doctor, right? Focus on that because you're making great money doing that. Don't take your eye off the prize to go do some flips or a single family rental on the weekend. Invest in real estate syndications, multifamily syndications, and enjoy that benefit and focus on what you're doing and have that time freedom. It's just makes so much sense to me for
No,
some.
and the great thing about syndication, if you think about it, let's say you invest like 50,000 on one deal today, and they normally take 5, 7 to 10 years, right? But let's say that this one takes 5 years. So you're going to get some cash flow monthly or quarterly, depending on the syndication. And then at the end of the 5 years, you're going to get a big check. And then, like, if you do this like for 5 years, and you just do one a year, in 6 years, you're going to start getting that big check every year because you're going to have one syndication closing, closing, closing. And then if you just reinvest that money and keep going, you're going to have this money doubling, every year, because you're going to have one syndication closing every year. So, it's an amazing strategy, even for active investors, especially for active investors that are doing, let's say, fix and flips, because they can put some of the money into a syndication a year, and then they keep doing their active investing. But then in 5 years, they are going to start targeting these big checks if they do it once a year, and and they get such an amazing tax benefit in being able to lower their taxable income, because if you're a real estate investor 100%, you can um, lower your income with the deductions. Your active income can be lower with your passive income if you are a real estate professional.
Yeah, absolutely. Yeah, it's just, yeah, it's such a great investment. But but we both a little bit biased, I guess. So talk me a little bit about this deal in Columbus, Ohio. So who was part of the team, and how did you guys find it, and what did you like about it?
Yeah, so our deal in Ohio, my team, part of my team I met on my mastermind, and that's why I love, you know, being part of, real estate communities and masterminds and events, because that's when you meet people that are really, really focusing on real estate. Because sometimes on meetups you meet people that they just go one or twice, but they are not really focused. When you go to a paid events, you get people that really are focused on real estate.
Mhm.
So I met one of my partners at my mastermind, and we knew each other for a year and a half before we partnered. Then we met in person in one of the events, and then this opportunity came around. And I was talking to him because I was sending him some deals in areas where he invests that I wasn't familiar with, because I wasn't going to invest in a place that I don't know unless I can partner with somebody that is in that area. And all these properties he already had seen through different channels. So I was like, hey, do you want me to keep sending you stuff? Because I think, like, you always have it, or maybe you don't want to partner with me, and I don't want to waste your time, and I don't want to waste my time. He's like, no, actually, I have a really good opportunity coming up, and I would love to join the team. And the conversation was like, they needed to do some marketing stuff, and I was like, I can help you with that. And he's like, yeah, I would love for you to join the team. And that's when you can add value to a team, and that's how you get into these big teams, because you are helping them with something that they need. So I was there at the right time, and I could help them. So I helped them with the marketing, and this was my first indication where I was going to raise capital. And it was just surreal to be able to do this, because I had been preparing myself, educating myself, branding myself, creating my company for a year, and a little bit less than a year before this opportunity happened. So it was really amazing to see everything, being able to put everything in place. So the property, they found it through a wholesaler, because I came to the team a little bit after, when we were already under contract. So they did all the due diligence. What they liked about the deal was the price was 40,000 per unit,
Mm.
and the market price is, at the time when we bought it, was like 72, the average,
Wow.
72,000 per unit. So we were buying a property with instant equity. That is amazing, because first rule of real estate, you have to make money when you buy the property, not when you sell it. Because if you make money when you buy it, you will definitely make money when you sell it. Unless for some reason you have to sell it at a bad time. But if you made money when you bought it, you're not going to lose, at least. you know so we bought instant equity. The location, Ohio, Columbus is the capital of Ohio, and it has a diverse um, sectors for employers. So you have a lot of employers. You have tech companies moving to Ohio. There's a housing need for 250,000 units in the next, I think it was in the next 4 years. So we were helping that need. So there was already the need, and we were providing the product. So it was a perfect market, and the property had rents that were $200 below market rents. So we had a huge opportunity in 194 units. Um, you know, $200 monthly per unit is a huge amount. So we were able to increase the NOI, which increases the price of the property when you want to sell it. So it was not managed properly, and so we brought professional management to the property, and now we are repositioning right now. We just closed at the end of the year. So right now we are in the process of renovating units. We just finished about, if I'm not mistaken, 12 units, and they are on the market to be rented. So we're super excited, and they are looking amazing. The work that our team has done with the renovation is awesome.
That sounds like an unbelievable deal to not only buy below market, the price per unit per market, but also to have such upside as well, right? So $200 over 190 units, right? Divided by whatever the cap rate is, there's pretty low, probably a 5.5, 6 cap, I imagine, in that area. That's a ton of value that you're creating there. It's just incredible. So congratulations on that deal.
Thank you.
So you also mentioned that you were looking to grow your own portfolio still, right? So is your goal to keep doing syndications and then take that money that you're creating by being more active and using that on your own portfolio, or are you going to be just more focused on syndications going forward, you think?
No, so for me, I'm going to be focusing more on syndications, because that's what I
Okay.
want to do.
Yeah.
But my husband is also, in the business. He helps. So he's been thinking about doing some flips. But that would be him. But obviously, I'm going to be helping him. But if we find something that is price right here in Florida, I would not oppose to buy it. I am already managing my units here, so if it's a good opportunity, I'll buy it, no problem. But my focus is going to be on syndications, helping people invest passively, and also for me, this is like a long-term goal. It's not like it doesn't happen like in a year. Like I said, our opportunity was 5 years, so I am. Um, I'm part of the asset management team as well. So I deal, we have meetings with our property managers every week to make sure that they are implementing the business plan and to make sure that we are um, doing everything in a timely manner, because I want to make sure that the money that my investors put into this deal and the projections that we made are realized. So I want to make sure that I'm involved in this process as well.
Yeah, yeah, that's awesome. That's awesome. Congratulations on that one. So next is focusing on keeping to do more syndications with this team, or are you looking to work with other teams? And what markets are you looking at?
So, well, so far, I have another opportunity coming with a variation of the same team. It's not exactly the same team, but it's some of the team members. I am open to work with other people, but I need to have uh, a good understanding. I need to know them really, because
Mm,
I know, now after, everything that I've been doing in real estate, you need to invest with somebody that you like and you trust, and that they have the same ideas as you and
mhm,
they have the same principles. And I am really hardworking. So I need to work with people that are also work as hard as me, because otherwise there's not going to be a balance and you're always going to feel like the other person is not doing enough. So for me, I will only partner with people that I know, that I trust, and that have my same work ethic and principles, and we have kind of the same vision. Because if you are partnering with somebody to have a buy and hold, but he wants to flip, then you don't have the same vision, right? Like he wants to sell fast, and you want to keep it long term. At the end of the day, you're gonna end up separating because you don't have the same goals. So um, that's the main thing. But for now, my team has been amazing. I'm super proud to be part of it, and we look forward to keep growing and keep looking for more opportunities.
yeah, really cool, really cool. Thanks for sharing that. So as this show is called Wrestling with Real Estate, I always like to ask some wrestling related real estate questions. So
Sure.
first question is, what would your wrestling name be?
I was thinking about that, and oh my goodness. So I'm gonna say Chola Fuerte,
Okay,
and
which
that has
means
a little bit of
which
a.
which
My
means
parents. So I'm Peruvian, and in Peru sometimes we call the native people Chola, and my parents always say I'm strong because I never get sick. So that's fuerte in Spanish means strong. So it's
uh-huh.
Chola Fuerte.
Charlie Feta. Okay.
I want to be strong.
Yeah, for sure. I can see that. um, so every wrestler has a special move. What is your special move in real estate?
My special move is networking for sure.
Yeah,
Yeah,
yeah.
you have no idea how much it has helped me in my investing life. I was buying duplexes, saving the money like one every 2 years because it takes a long time. And once I started networking and surrounding myself with people that have the same mindset as me, everything changed because I started looking at what they are doing. And I'm like, I always had the mindset of, if you can do it and I see you do it, like I can do it too. Why not?
Yeah,
Like I'm seeing it, so it's real. I can do it. So surrounding yourself with people that have that same mindset, it pushes you so much higher than what you thought. So networking has given me that opportunity, because now I go to, I think, 3 meetups. I host a meetup here in South Florida, and then I go to one that is on Saturdays, and sometimes I go to a women's meetup. So networking has been huge. So I love it.
yeah. No, it is, and it's like you said, it's not just networking; it's the type of networking that you do, right? You've got to surround yourself with people doing what you want to be doing as well, right? Because just by being around that, it inspires you, it educates you, and it just by being around that, it just leads to so much more success and growth. I feel like so. That's
Yeah, you find your tribe, right? Like I have now fellow investor friends here in South Florida that if I have a question, I want to call them, like, do you have a mortgage broker, or have you done this type of loan? Do you have any resources for this? And I think the real estate community is so open to help others. It's amazing because when I started real estate, I had this scarcity mindset that like I cannot tell anybody my secrets because they are going to take it away from me. And I have learned that an abundance mindset is so much better, and just seeing everybody share their knowledge. And I have taken so much that I'm also wanting to do that. And that's what kind of what I do with my podcast, where I also share the stuff that I learned that I wish I knew when I started, 8 years ago, because I would be so much farther right now if I knew all this information at the beginning.
Yeah, yeah, very cool. So what's been the biggest body slam you've taken in your real estate investing career?
The bodies. Okay. So I bought a property when the third duplex that I bought, and I did the numbers, and the numbers work, and everything was good. And I calculated the taxes based on my two previous properties that I bought. So I set aside money, and I knew that the taxes were gonna go up, and I calculated. But that's when the property started going up in price, and the next year the taxes for that property went up a lot once it was recorded that the price went up. And I was not prepared for that. Um, so I bought that property with a HELOC. So I used my home equity to buy it, so I had to pay. So basically I bought it with none of my money, and the numbers were tight, right? Because I used the home equity that I had to pay, plus I had a mortgage that I had to pay, and I had, supposedly a little bit of money left of cash flow. But once the taxes went up so much, I had no cash flow. It was like it was breaking even for a year until I was able to raise rents, and I was able to lower the insurance and do other adjustments where the property is cash flowing again. So, that was a big lesson because that taught me I really need to, first of all, go to the property appraiser and look at what the taxes would be, which is always more than you need, but it's better to plan for worse than for, for less. So that was a big lesson. Like, I won't make that mistake again.
Yeah, what was it about that property that you liked though? Even if you said that the cash flow was going to be slim, even without the taxes, there must be something. Was it the area that you believed in, that, or do you just want it? Were you just eager to buy at that point?
Um, well, in Florida in general,
Uh,
buying rental property, I aim to have my 1% rule work. And like if I can have $100 a door of income,
mhm.
I'm happy because I know that the property is going to appreciate. And it's, buying and holding is not a get rich fast strategy. It's a get rich slow strategy because
Mhm.
you're gonna build up equity. You're gonna build up. So I'm buying and holding them for the long run. So it really, my goal is for the property to pay itself and to have a little bit extra cash, to go out for dinner every month, but not to break the bank. I know that other markets like Ohio, like you can have a 2.5% rule where like you're making a lot of cash flow, you have a lot of money. But I started locally in South Florida, and that's what I could buy. So that's what I did, right? Like I would never thought in my wildest dream 8 years ago that I was gonna be buying in Ohio, like out of state, in a syndication. So that was a big step. But I think when you start with what you know, and that's what I knew.
Yeah, very cool, very cool. So, was there a moment that you were standing on the top rope, getting ready to jump, but you were too scared? What was it, and how did you overcome it?
So, I mean, to be honest, um, I think every time there is a big decision that I have to make, uh, you know, I am in fear. Okay, so I just have learned that I need to keep pushing because nothing is going to be accomplished if you don't push yourself. So one example, was when I had to release my podcast. I was really scared, thinking it's not going to go good, it's not going to. So I kind of kept delaying it and kept delaying it for this reason and for that reason, and I need to do this and I need to do that. So finally, my in my mastermind, they were like, Annette, you just need to do it. It doesn't have to be perfect, and I'm like, okay. So that's when I released the podcast. And once you do it, you're like, like it wasn't that bad. But it sometimes it takes a little bit of somebody like telling you, like, just do it.
Yeah, that's what it is, right? Sometimes you can create all this ideas in your head and everything like that, and until you just actually do it, nothing, you've just got to forget all that stuff, right? Just do it, right? Just doesn't have to be perfect, just like you said there. So yeah, I think that's really interesting. Well, Annette, this has been really interesting. I appreciate you taking the time today to share everything that's kind of gone on with you. It's a really interesting story that you have, and I appreciate you sharing everything. But before we go, can you tell people where they can find out more if they want to reach out and get in touch with you, or find out more about what you've got going on?
All right. So they can go to my website, talieinvestments.com, and they can find a couple of free resources like a free syndication guide for passive investors. And they can also find a free deal calculator spreadsheet if you want to do some buy and holds, and also a commercial real estate glossary. And you can also find me on Facebook, LinkedIn as Anette Talie. You can find me on Instagram as Talie Investments. And the last one, you can listen to my podcast, Real Estate Deal Closers. It's on Apple iTunes, it's on YouTube, it's on, I think, all of the outlets there that I could find. It's there, but mainly on iTunes. So take a listen.
Yeah, it's going to get very good very soon because we're about to record the episode with me next. So I'm excited.
Absolutely.
Well, cool. Annette, thank you so much. Have an awesome rest of your day.
All right. Thank you. Bye.